Ladies and gentlemen, welcome back to the channel, where we break down the latest trends and insights from the electric vehicle space. Today's focus is squarely on Nio, the Chinese EV company that has recently seen a major shift in momentum. The stock has been on a roller coaster, but something has changed over the past few weeks. We're now witnessing a very promising upward trend in Nio's share price, and many investors, including those who typically rely on technical analysis, are now paying close attention. Whether you're a long-term investor, just curious about the EV market, or considering a position in Nio, today's update is one you won't want to miss. This is not financial advice. Please do your own research. Let's break down everything, from Nio's recent share performance, to how it compares to rivals like XPeng and Li Auto, to why this might be the start of a major turnaround. So let's start by talking about how Nio ended the week. On Friday, when the market closed, Nio shares were priced at $4.92, marking a gain of 1.86% on the day. What's more, in after-hours trading, the price edged up even further, gaining another 1.22%. And when you zoom out and look at the bigger picture, the signs are indeed encouraging. Over the last 2 weeks, Nio has performed exceptionally well. In fact, if we look at the past 30 days, Nio stock has surged by a whopping 43.47%. That's not a small bump, that's a major upward move, especially for a stock that's been battered for months. Now, looking at year-to-date performance, Nio has climbed 8.13%, and over the past 52 weeks, it's risen by 11%. This tells us something very important. Not only is Nio rebounding, but it's doing so in a way that suggests more stability and investor confidence than we've seen in a while. Let's talk market cap for a second. By the close of Friday's session, Nio's market value stood at around $10.92 billion. For comparison, XPeng currently holds a market cap of $18.2 billion, while Li Auto is significantly ahead with a $30 billion valuation. So even though Nio is showing strong upward momentum, it's still far behind its competitors in terms of total market value. And that presents an opportunity because Nio is, arguably, still undervalued. A lot of people look at the recent gains and assume Nio is now on par with its peers. But let's take a deeper look. Nio isn't just an EV manufacturer, it's an ecosystem player, and one of its strongest advantages is its Nio Power division, which includes its extensive battery swapping infrastructure. While companies like XPeng and Li Auto are focusing on developing their own charging networks, Nio has gone a step further by building out over 3,400 battery swap stations. To put that into context, just a few years ago, when Nio only had a little over 20 stations, the company valued this infrastructure at approximately $2 billion. Now, with 3,400 plus stations and growing, it's reasonable to estimate the Nio Power segment could be worth somewhere near $4 billion. This alone sets Nio apart in a crowded field. Battery swapping may not be mainstream yet, but it offers a serious competitive edge, particularly in a market where convenience, speed, and innovation matter. No other global EV company has developed a battery swap infrastructure on this scale. That uniqueness deserves to be valued more than it currently is by the market. Now, while battery swapping is certainly exciting, today's discussion is primarily about Nio's share price and its recent performance. Over the last month, as mentioned earlier, the stock is up more than 43%. That's huge, especially when you remember that just 3 weeks ago, Nio was trading at a mere $3.60. Its 52-week low sits right around $3, while the high for the year is a bit over $7. That kind of range tells you all you need to know about this stock's volatility. And let's be honest, volatility comes with the territory when investing in growth stocks, particularly in the EV sector. Nio is no exception. But what sets Nio apart is the potential that volatility brings, especially during upward trends like this one. Of course, such price movements can be nerve-wracking. But those who understand the company's long-term vision are less likely to panic during the inevitable pullbacks. Looking ahead, I truly believe we're going to see more green than red in the week to come. I think we're witnessing the early stages of a stronger, more sustainable rally. And hopefully, if you're watching this, you weren't one of the investors who sold their shares when Nio was scraping $3 per share. Those who panicked during the dip may now be regretting it, especially with how things are shaping up. That's why it's so critical to stay informed about the companies you invest in. Having the right information at the right time can make all the difference. If you didn't know about Nio's battery swapping strategy or its diversified business model, you might have assumed the company was finished. But with the facts in hand, you'd see that Nio still has enormous growth potential not just in China, but globally. Many of us retail investors, long-term thinkers, have decided to stick with Nio because we believe in its vision. We've learned that regret stings more than failure, and that not investing enough in a promising company could cost more in missed opportunity than taking the risk in the first place. So yes, I'm feeling hopeful. We've taken some hard knocks along the way, but it looks like things are finally beginning to turn around for Nio. For months, Nio was the most undervalued stock in the Chinese EV market. But that narrative is starting to shift. With every gain in share price, Nio moves closer to matching the market caps of peers like XPeng and Li Auto, and in some ways, Nio's business model makes it even more compelling. Let's not forget, Nio operates in the world's largest EV market, China, and its potential to dominate there is significant. And this is still the beginning. If this upward trend continues, as I believe it will, the gap between Nio's current valuation and its true worth could start to close rapidly. To wrap it all up, Nio is on the rise. After a long period of struggle and undervaluation, the company is finally showing signs of a major turnaround. Its stock price has surged over 43% in just 1 month, outperforming many expectations. Yet even now, it remains significantly undervalued compared to XPeng and Li Auto, which presents a major opportunity for investors. Beyond selling electric vehicles, Nio is building out an ecosystem that includes battery swapping stations and a power infrastructure that no other EV company in the world can match. This adds long-term value and gives the company a serious edge. Whether you're already invested or thinking about getting in, now's the time to watch Nio closely. Remember, in the world of investing, timing matters, but so does patience. And for those holding Nio through the downturn, things are finally looking up. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.